Today, the market's traded indecisively most of the day because of the waiting to see what the results of the healthcare voting was going to do. And when it passed, the markets traded well off their lows and came back up. A very simple trend analysis system is that as long as we're above the T-line, the 8 exponential moving average, the uptrend has to be considered in progress. That's better clarified by the fact that when they broke through this level here, they did it with a best friend gap up, and they gapped up through this level, telling us that this level is not acting as resistance, putting us in a situation where we could probably be in wave 3, which would be the same magnitude as wave 1. So as long as we're above the T-line, and again, the T-line is probably one of your most powerful trend indicator confirmation factors that, in combination with candlestick signals, give you a very powerful view of what's going on in the overall market. Knowing what should happen based upon doing your candlestick scanning. For example, today EMKR did a kicker signal, very strong. It's the strongest of the candlestick reversal signals. It opened here and closed here on Wednesday. Today, it gapped up at or above the previous day's open and went the opposite direction, telling us that they've kicked investor sentiment in the opposite direction. So this one you want to stay long because the probabilities are that you're going to have more upside, which was the basis of our recommendation on EXAS last week when you had the kicker signal off the T-line. And this is the kind of the expected results you have off of those signals. Candlestick signals work just as effectively when you're trading futures, currencies, bonds, anything that has human nature in it. It works effectively. We had a very strong trade in our live cattle trade. Simple rules of candlestick charts tell us, well, there's our J-hook pattern. We entered this trade right at this level with the anticipation that our next move would be this magnitude. However, you can see we had a very strong price move. When the strong price move occurs, we now have a new alert. Notice how far away you've moved from the T-line. That tells us we should be looking to start taking profits. What keeps us from not taking profits up here versus down here or waiting for a sell signal? Very simple. If we know we're way too far away from the T-line, and we could see on the 10-minute chart, every day it was going up the limit, and this morning they gapped it up, the limit again, one of two things are going to happen. Remember, if they gap it up in an overbought condition, start looking to take profits. We set our stop right here at the 10-minute T-line. When it came back down through there, it told us to start coming out of the trade. So we get in right at the appropriate time, and then the 10-minute chart tells us when to get out when things are well in the overbought condition. This allows a candlestick investor to get in right at the appropriate time and get out because of the other indicators, such as moving too far away from the T-line and taking profits up here versus waiting for it to come all the way back down to the T-line. That'll be it. We'll see you in the chat rooms.